Walk into any bank branch in America. One lobby, one set of tellers, one logo on the wall. Right now, someone inside that same building hasn't paid a bank fee in years. They have a banker's direct number in their phone. When they need a mortgage, they don't accept the posted rate. They negotiate it down. You've never been offered any of that. Not because you didn't qualify, because you didn't know it existed. The difference isn't loyalty. It's how much you're worth to them.
Here's what's actually happening. The less money you have, the more the bank charges you for being there. The more you have, the more they pay to keep you. Balance drops below their threshold, they charge you a monthly fee. No call, no warning, gone. Balance crosses their threshold, fees vanish. Rates improve. A real person picks up. Same bank. Completely inverted experience. This isn't accidental. It's engineered. And most people inside it have no idea the other floors exist.
Most people assume wealthy customers get better service. That's not the revelation. The revelation is that it's not better service. It's a different product. Different pricing, different access, different rules. Before regulators stepped in, banks were pulling in over $10 billion a year from overdraft fees alone, mostly from people at the bottom of the system. The government forced major banks to pull back, but the architecture, the tiers, the thresholds, the invisible walls, still intact. 5 tiers. Most people only ever see one. Floor 1, standard banking. The penalty tier. This is where most Americans start. Most never leave. Checking account, maybe savings. Paycheck in, bills out. Try to keep enough in there to avoid the fees. That last part is where it costs you. Most major banks charge a monthly maintenance fee if your balance drops below their minimum. $10 to $25 a month. Up to $300 a year. Just for having less money than they want you to have. Overdrafts. Historically, $25 to $35 per transaction. Regulatory pressure changed some of that. Citi and Capital One eliminated overdraft fees entirely. Bank of America dropped theirs to $10. Smaller institutions still charge full price. Here's the math nobody shows you. A $35 overdraft fee on a $10 transaction is a 350% flat penalty on the money you missed. Calculated like a short-term loan, the annualized rate runs into the thousands of percent. They call it an overdraft fee. It sounds minor. It isn't. At this tier, you're not a customer. You're a revenue line. Cross $10,000 in combined deposits, you enter the convenience tier. Monthly fees disappear, savings rates tick up, you hit a shorter queue when you call. Some banks assign you a relationship banker. Shared, not dedicated, but a real name on your account. Bank of America Preferred Rewards, Chase Sapphire Banking, Wells Fargo Portfolio, all in this range. Same building, same logo, but your balance crossed a threshold, and now you're worth investing in instead of extracting from. The bank stopped punishing you for being there.
At $150,000, you enter the influence tier, and the experience changes in ways most people don't know are available inside a standard bank. Chase Private Client at $150,000, combined across checking, savings, and JP Morgan investment accounts. Citigold at $200,000. Merrill Wealth Management, Bank of America's wealth arm for this range, in a similar bracket. What changes? A banker's direct number, not a 1-800 line, their actual number. You text them. ATM fees gone, globally, including operator fees at machines that aren't your bank's. Mortgage applications get negotiated below the advertised rate, not because you ask nicely, because at this balance, keeping your business is worth more than holding the line on rate. Invitations to events that aren't publicly listed, private market briefings, client-only seminars. Here's the shift that matters. You stopped calling them. They started calling you. At $1 million, you enter the access tier. This is the tier most people don't know exists, even people who consider themselves financially aware. Goldman Sachs, Citi Private Bank, Bank of America Private Bank. Minimum $3 million to enter. Not six figures, $3 million. JP Morgan Private Bank runs full bespoke service at $10 million. Below that, you're routed to Chase Private Client or Standard Advisors. The line is that clean. One dedicated private banker, backed by strategists, tax specialists, and estate planners. Their entire job is to know your financial life. Your investment portfolio isn't pulled from a list of pre-built funds, built from scratch for your situation. Your mortgage rate isn't on a website. It's negotiated using institutional pricing retail customers never see. IPOs, private equity, venture capital, completely closed to the public. You're in the room. That's why you get access. The bank doesn't just hold your money. It works around your life. Above $10 million, you enter the power tier, the exact inverse of Tier 1. You don't go to the bank. Senior executives come to you, at your home, your office, on your schedule. Lending isn't an application. It's a custom structure built against your existing assets at wholesale institutional rates that bypass consumer pricing entirely. Multi-generational estate planning, philanthropy advisory, private aircraft, dedicated security consultants. They don't come to the building comes to them. You don't use the bank uses you as a trophy client. So why does this exist? Not personal, not malicious, math. Low balance customers generate fee revenue. High balance customers generate lending and investment returns. The incentives completely reverse. What most people miss is how invisible it is. No sign listing the tiers, no email explaining what unlocks at $150,000, no conversation about what's available. The system just runs, quietly, automatically. Most people never know the other floors exist. Banks don't sell banking. They sell access, priced against what you're worth to them. At the bottom, you pay for access. In the middle, it's free. Near the top, they compete for it. At the very top, it finds you. Knowing this doesn't make the system fair. It means you see it for what it is. Most people think banks store money. The reality is simpler. Banks rank customers. And everything, the fees, the service, the rates, the access, flows from where you sit on that list. Most financial systems only make sense once you see the incentives underneath them. If you want more breakdowns like this, subscribe. The tiers were always there. Most people just never had a reason to look up.